there's two major influences on the real estate market, right?
Mm-hmm.
There's supply and demand, right? So there's the supply of housing.
Mm-hmm.
Do we have enough to support our demand? And then there's demand, which a lot of that rolls into home price affordability. And a lot of that is driven by interest rates and, can you afford the mortgage payment? So it's a little bit more than just the home prices that roll into that. But it comes down to two things. It's supply and demand. So everybody's really talking about the demand side, which is affordability, which I get you, right? Things are less affordable today than what they were in the past, right? They're talking about the Fed increases, which is substantial. We do need to pay attention to that, but that affects affordability, which affects demand. Not many people are talking about the supply side, but the supply side is just as important. If there's no houses for people to buy, or a very small number of them, then people who are moving to a growing population like Jacksonville are going to pay more for those houses.
Yep.
So we got to focus on the supply side as well as the demand side. And that's really where I want to take our conversation right now, because when we start to think about why I know this is going to be a normal performing market and not a crash, I don't have to look any farther than supply. But let me bring you up to speed with an easy way to understand, do we have enough supply to support our demand? It's this wonderful metric called months of inventory. Call it MOI. We talk about it often on the show.
I remember the first time it made an appearance on the show. It was March 2020.
That's right. That's right.
When all the headlines were saying that we are about to crash, everybody was freaking out. And you said, in the short term, it's definitely not. Because MOI.
How much of this message that we're sharing today has been a consistent message where everybody said, hey, listen, this is going to be a crash in March of 2020. I went to the supply side of the data.
Yeah.
And I said, what is months of inventory telling me? And after that, that's why we were able to come strong when the rest of the world said that real estate was going to crash in March of 2020. We, in our group here, said, that's not going to happen. We said home prices are not going to go down. And it's because of this information that I share with you all. So if this is your first time hearing it, I hope you pay attention, because it should give you more perspective and you'll be much more educated than those talking heads out there who are writing crazy headlines.
So if you're on the podcast, listen, we have the slide up that says months of inventory, right? And we talk about this idea that months of inventory will tell you whether you are at above average or below average home price appreciation on the show all the time. The average home price appreciation for Jacksonville over a full market cycle is 4.6%. And the average months of inventory is somewhere between 6 and 7. So basically the takeaway is that if you are below 6 months of inventory, then you can expect a higher than average home price appreciation, higher than 4.6% a year. And if you're above 7 months of inventory, then you can expect a lower than 4.6% appreciation rate. Now that means that above 7, you start getting into 4% appreciation rate, 3% appreciation rate, right? Like there can still be positive appreciation above 7 months of inventory. It's just going to be less than 4.6%.
Well said.
Right?
Well said.
Okay, cool. I just wanted to get that clearly out there.
Yeah, it's like any other business. Think of yourself, right? If you have widgets to sell, if you have low inventory and you have a ton of buyers out there, there's going to be upward pressure on pricing. And the opposite is true. If you have a ton of inventory and you don't have very many people that are buying buying inventory over the last month, well, there's going to be pressure to decrease your prices. So this is a metric and we'll start to look at some correlations between how housing prices have performed and what this metric has done in the past. But it is a really important indicator. And it's one that my team, we buy millions of dollars of real estate every single year. It's one that we know every single month because it's that important.
Cool. Let's look at the correlations.
So let's give a little bit of data and perspective here. So I'm going back 2 years now, and I'm looking at the Jacksonville real estate market, and I'm looking at the number of houses on the market, which is your inventory. And then I'm looking at the total sales on the market. And then that calculating our months of inventory. So we had about 3,700 houses on the market in March of 2021, and we had 3,400 sales in March of 2021 for months of inventory of 1.1. Guys, 1.1 months of inventory is incredibly low. As an investor in Jacksonville, I own over 300 rental properties. I've owned them since 2006. I have never seen months of inventory that low. That has been the biggest reason why home prices went so high over the last 2 years. It's the supply side of this.
Yeah. And so high means we've had like 12% home price appreciation, right? Like what?
Yeah, 15 to 20%
15 to
appreciation 2 years
20%.
in a row.
Yeah, 2 years in a row.
So that is incredibly low. To give some perspective, I've seen it where houses on the market has been over 16,000 houses on the market at one point. So to have almost just 1 month of inventory for the number of sales is incredibly low. And that's why 2 years ago, all of us on the show, I was openly talking about how prices are going up.
Yeah.
And this is the time that you should be investing because home prices are going to go up. So fast forward to March 2022, houses on the market are down a year ago, 3,200. We are not solving that supply issue, and that's increasing home prices. We had 1 month of inventory. Again, unbelievable. I'd never seen it before. And we still have a tremendous amount of home sales because people are moving to Jacksonville. It's interesting. Home prices had gone up 15 or 20% from 2021 to 2022, and we still had 3,400 sales in March of 2022 at the new high prices.
And if I was to look at this without perspective, I could have said year over year, sales went down.
Yeah, right.
Right.
It's a really good perspective there. That's not, yes, that is accurate, but that lacks perspective. We had never been over 3,000 sales in a single month in Jacksonville history before June of 2020.
Yeah.
Never happened.
Yeah. So let's talk about now, man.
So now we see, and then let's put ourselves again in the mindset of those who may be looking at this and concluding incorrectly. Okay. You see houses on the market and now it's 6,475. And you may say to yourself, oh my goodness, we're oversupplied. We have twice as many houses on the market now as we did a year ago. There must be way too much supply, but they don't understand that you need to look at houses on the market and you also need to look at sales, the demand side of this. We still had over 3,000 homes sold in March of 2023. Our months of inventory is only 2.1 months of inventory. Guys, I was working with clients from 2013 to 2019. Right? I've been working with clients for a lot longer than that, but from 2013 to 2019, we didn't have below 3 months of inventory on the market. Like, this is unprecedented to only have 2 months of inventory. And that is the biggest reason to answer your question about why am I really confident that this is not going to be the crash, and why have I been saying this for well over 6 months now, as all these other talking heads have been saying it. It's because of the supply side, right? We are undersupplied as a market here in Jacksonville, and that leads to price stability in the short run. While we don't know what the Fed is doing with interest rates, at the very least, it's leading to price stability in the short run. And you're going to see this is the foundation for above average and upward pressure on housing prices, especially over the next 3 years. It's because it takes time to build that many houses to solve the supply problem.
Got it.